Then you have the closing inventory of the e-bikes. It is expected to be valued around this much. Okay, 683775. Calculate the budgeted net profit. So we know what is a net profit, right? So we know net profit, any budgeted or any net profit is equal to the revenue minus COGS, right? So let's write the formula for this. So any net profit formula is revenue minus COGS. So that is equal to, so revenue, we know we have calculated revenue at the break even point, okay, minus COGS consists of variable cost plus, okay, variable cost plus the fixed cost minus the closing inventory. Minus the closing inventory cost. So we know that it is a fixed cost minus variable fixed cost plus variable cost minus the closing inventory cost. So this will give us the budgeted profit. Now let's calculate this. So the first one is the revenue. So the revenue is equal to new, and we know that the revenue we had calculated, it is 320 times 42750. So the revenue is equal to the number of units that is expected to be sold. It is 42750. Okay, it is 42, or I will write it as 95% of 45,000. Okay, times 320 is the selling price. So that is going to be your revenue. So the value is going to be around 13,680,000. Okay, 13,680,000. This is the revenue. Now we have to calculate what is the COGS, okay, cost of goods sold. So that is equal to, now we have the variable cost. So the first one is going to be variable cost. Okay, variable cost. Then you have the fixed cost, and then you have the closing inventory. So I'm taking it as a negative value because when you open this, okay, outside the bracket, revenue minus variable cost minus the fixed cost plus the closing inventory cost is what is going to be achieved by this formula. So that's why I am writing this as negative. So the variable cost, okay, the variable cost, we know what is the variable selling price. It had been calculated in the part A1 question. It is 234.5, and the number of goods that's expected to be, the number of goods that was produced, okay, the production was actually at 45,000. It is not at the selling quantity. So the number of goods that was produced was totally 45,000 e-bikes were produced, and their variable cost was around 234.5. So it is going to be 234.5. Then you have the fixed cost. So for the fixed cost, you have, that was also calculated, okay, for the fixed cost it was calculated in the part A. It was 223,000. Okay, so that one you will write just like that. It was calculated, it's fixed. Okay, now what is 45,000? 234.5. it is equal to 10 552 500, and this one is also going to be, the fixed cost is also going to be negative, so you will take it as negative. And then okay, and then you have closing inventory. So closing inventory cost is around 68775. It is given. Okay, this is to be added because the inside the formula it was negative. Now when you open with a negative sign, it is going to become positive. Now let's calculate this value. So the cost of the goods sold 10, 10, 552, 500 minus 10, 10 minus 10, 552, 500 minus 2, 2, 2, 3000 plus 6875, 683775. It's going to be equal to 12,091,725. Okay, this is the value for the cost of the goods sold. Now we know that the revenue was around this much, the cost of the goods sold was this much. You subtract and then you will get a profit. So that is going to be equal to, so this is the budgeted profit. Budgeted profit is going to be equal to 13,680,000 minus 12,09, 091,725. Okay, this is the value. So now the profit is going to be equal to 1,558,275. Now this is the budgeted because we are taking the budgeted or the forecasted, okay, forecasted revenue that is to happen in the